and welcome to this conversation on BloombergQuint. The IDFC and Shriram groups are talking about a merger. A 90-day exclusive period of talks has been initiated. Joining us to help us understand the implications and actually the idea behind the idea, Dr. Rajiv, Lall, Mr. Thyagarajan, Mr. Piramal. Must say that it's absolutely rare and probably never again would we have the opportunity to see everybody in this platform together. Dr. Lall, my first question is to you. What is driving this merger from your perspective? Is it just a little bit of impatience for scale? And I come back to the question I asked you on the press conference. Would it not have made more sense for you to look for a franchise which had a liability franchise, because that's where you've really struggled, sir?
No, so I disagree with that. This is actually exactly the right sequencing for us, because you have to understand that we started our life as a listed bank, and I'm not talking first from an IDFC bank perspective, and I'll come to IDFC Limited in a second. Having started our life as a listed entity, it means that we are under continuing earnings pressure, and at a time when corporate India is going through, large corporate India is going through its own travails, and given our legacy balance sheet, right, it is actually vitally important immediately to accelerate the pace of the retailization of the asset side of the balance sheet. So that's purely financial. But what this deal offers is actually much more than that. It's not just buying assets. It gives us an opportunity to gain access to 1 crore customers, 10 million customers, to whom we can now develop, at a much more accelerated pace, a retail liabilities franchise. So it certainly helps us immediately financially in terms of accelerating the pace of our earnings growth, but it gives us a platform to build a much more powerful retail liabilities franchise much quicker than otherwise. Because biggest challenge in building a liabilities franchise is distribution and customers. They have the customers. We are gaining through this over 1,000 points of presence, and thanks to the RBI's relaxation or changes in regulation with respect to what is a branch versus a banking correspondent versus a banking outlet, we can make very effective use of the distribution infrastructure that Shriram Capital brings to the table and build our retail liabilities franchise. From the IDFC Limited point of view, it's even more powerful because they get a stronger bank, they gain access to all the earnings of a thriving monoline NBFC, which is the transport finance company of Shriram Limited, of Shriram Capital, which will become 100% subsidiary. They gain a significant stake in the thriving insurance businesses of the Shriram Capital Group, and therefore IDFC Limited shareholders will have seen the creation of a conglomerate, a financial conglomerate, with the focus and ability to deliver the full range of financial products, particularly to customers that are smaller and that are the backbone of the country, that are today underserved, and that would complement the corporate and wholesale origin DNA of IDFC Group extremely well.
Right. Mr. Thyagarajan, just this question, because this is something that all three of you belabored this point at the press conference about coexistence of both these brands, the IDFC and the Shriram brand. How would it practically work? Are we going to see a situation where IDFC Bank would then be selling a financial product with a Shriram label? How would this practically work on the ground?
I think the products and the guidance to market them properly would come from the IDFC Bank. We have a very large, almost 60,000 employees, and as Rajiv was mentioning, a few million customers. So delivering to them is what we will be doing. The brand helps. With our customers, the fact that the Shriram brand is available gives them the friendliness and the confidence to deal with this enterprise. And from IDFC's side, the confidence again of the backing of a bank, that also is going to help in delivering the product to our customers. So on the whole, it will be a good combination that we will be delivering to our customers.
Mr. Piramal, you said, of course, and it goes without saying that all RBI regulations will be adhered to. But I want to understand two things. One, so if you're saying that you're speaking to the RBI, I assume you will, on keeping the transport finance business outside. What is the argument that you're making? And similarly, for your role in the entity, given your overall picture of the Piramal group and your real estate businesses, again, what is the argument that you're making to the RBI on both those fronts?
As far as the Shriram transport is concerned, what I understand is that if you have a non-operating finance, the holding company, RBI has given approvals for 100% owned monoline businesses, which is what Shriram Transport is. So I believe that RBI should be in a position to approve it. Only time will tell. As far as the Piramal role is concerned, I think whatever the RBI deems fit, we will do that. I don't think we have any other aspiration other than what the RBI thinks is appropriate. So that here I am in my capacity as chairman of the Shriram group, and that's what that's where this whole merger is taking place on.
Sure, but the Piramal financial business is also there.
So, but that will remain a separate, that's going to remain a separate thing. It's like how I'm on the board of Tata Sons. Do I mean to say that I act there I act as a member of the Tata Sons board, here I act as a member of the Shriram Capital board.
So this doesn't preclude your plan to have a separate financial listed entity, which you had spoken about in the past that you made?
So yeah, that is totally independent of what is happening over here in the Shriram and the IDFC conversation.
Dr. Lall, just this point about Shriram Transport Finance, this is something that we talked about earlier. What is the reason behind keeping a lending entity separate from the bank as part of the overall holding company of IDFC Limited?
Well, there is a regulatory explanation for it, and then there is a more commonsensical explanation for it. You know, today in the IDFC group, we already have a specialist lending entity called the IDF Infra Fund, right? So they do operating infrastructure assets only. So it's not as if the RBI does not allow, to Mr. Piramal's point, certain types of monoline NBFCs to coexist in the group. So we want to take advantage of that possibility to also meet other regulatory obligations, such as the ownership of IDFC in the bank. It cannot dilute beyond a certain point over a certain period of time. So keeping the two entities helps us meet regulatory issues, and it helps us build businesses and actually better manage the process of integration between the groups over time. So, you know, we are separate in parallel, but we can work on synergies, we can integrate our technology platforms, we can cross-sell, and also meet regulatory obligations. It's actually a very neat solution.
Thank you so much.
Thank you so much.